Thank you for having me, Dave. As Dave said, I'm Jeff Gibby. I'm going to talk a little bit about finding a strategy that works well for you in today's pretty volatile markets. So I hope everybody's doing well. I hope that's something you want to learn about, et cetera, et cetera, et cetera. Let me get straight to our legal disclaimer. I want to kind of reiterate as we get started, though. If you have questions, make sure you ask them. I keep a really good eye on the chat, on the questions, try to answer all of them to the best that I can, and all that kind of stuff. So I do want to keep my lawyers happy, so today's demonstration is designed to instruct you on using MetaStock and the accompanying software plugins. It is not a recommendation to buy or sell, but rather guidelines to interpreting and using specific indicators and features within the software. The information, software, and techniques presented today should only be used by investors who are aware of the risk inherent in trading. MetaStock and its employees shall have no liability for any investment decisions based on the use of the software, trading strategies, or any information provided in connection with the company. MetaStock and its employees do not endorse the purchase of a security, nor are they paid for the promotion of a security. No information contained in the presentation today should be construed as investment advice or the solicitation to buy a security. We're not going to talk a lot about kind of current markets today, though, so we don't really have to, I still have to read it. They make me. So anyways, my name is Jeff Gibby. Just to give you a little bit of a 5,000-foot view of me, I started next year, well, actually this year will be my 29th year at MetaStock. So I look forward to being able to say it's my 30th year, but I'm gonna have to wait a year to say that. So I started here about 29 years ago. I started in our inside sales team, and at that point, I didn't know what a stock was or option or future or anything like that, but I quickly learned. So for about 10 years, I worked in inside sales, and we would talk to people about our software, trouble they were having with traders. Usually, you know, if people aren't making money, it usually comes down to like a few things that they need to fix, like their money management, their security selection, their education about what they're doing. And MetaStock's really good at handling that. For the last like 20 years or so, I'm in charge of our sales team. I work with a lot of our partners, and I obviously do a lot of presentations. So MetaStock is a very well-branded product. It's a well-received product. We've been making it here in Utah since the 80s. And I hope you had a chance to read this slide, because I'm not going to read it to you, but it has been rated. One of the things we are super proud of is the fact that it's been rated #1 in its price category for 32 years in a row. The new awards haven't come out yet this year, but hopefully this year it'll be 33 years in a row. And just to kind of give you some context on this particular award, it's done by the readers of Stocks and Commodities magazine. Every year they kind of poll their readers to say, what's your favorite software? And we've been lucky enough to have software customers that have been using our software for decades, and that have been ranking us #1 just year after year after year after year. So let's go ahead and kind of move on to that. That's about, I do have like a very special offer for MetaStock at the very end. I'll talk about that a little bit more, but I don't want to come in here and just talk about the software all day. I could. I want to talk a little bit more about trading plans and the importance of having a plan and understanding a plan. I'm going to teach you today about MACD. We're going to talk a lot about MACD, how it's calculated, how you can interpret, how you can use it. And then I'm going to show you ways you can kind of compare that indicator that we learn about to other indicators and see if it's the best performing one. So that's kind of where we're going today. And as I said, I do have a little bit of a special offer that I don't even do very often. So let's go ahead and get started. The first thing I'd like to do is ask you guys a question. What do you think is the best profession for trading? And I have a couple of options here. There's teacher educator, engineer architect, C would be psychologist or psychiatrist, D would be a pilot, E would be a performer, and artist musician would be the final answer, or F. And I want you to guess. Just give me the number here. If you're the first person to get it right, I'm going to drop you an email and send you a free book. So on this list, I think it's pretty interesting. Over the years, I've been lucky enough to work with enough educators and enough market experts that I've talked to kind of a lot of people that fit into different numbers. Like Somebody I have a lot of respect, he might be speaking today actually, is Jake Bernstein. He placed his first trade in 1960. He was a psychologist, or actually a psychiatrist, originally by trade, and kind of got into trading futures because of an ad about eggs. That's a pretty interesting story. Also, Dr. Alexander Elder is a very, very famous technician, wrote a really good book. He was also a psychologist. And I think there's some truth to that being a potential answer for C. But the actual correct answer is pilot. And that's funny because I do know a couple pilots, some really good traders. Greg Morris comes to mind, Chuck Hughes comes to mind. Greg Morris managed about $19 billion for Stadium Money Management. And then the correct answer is D. And Kumar, I'm going to just you had that as a correct answer, and you're the first one. I'm just going to see if I can get I do have an email address for you, so I'm going to drop you an email and I'll send you a copy of a book by Steve Bigelow, just for getting that answer right and just for participating. Over the years, I've kind of thought a little bit about this. I think the reason that this has been rated, the reason as pilot is the best one, is because of the discipline that they have. With a pilot, when you kind of go to take off, you have a complete checklist, exactly what you're going to do in exactly what order, and it's a very disciplined profession. Also, when you go to land, there's a very disciplined order. If there's an emergency, there's a very disciplined list of things that you need to do. And discipline is the reason I think that pilot is the correct answer here. And it is the correct answer according to this study. So in any case, let me kind of go to the next slide. If you're not familiar with this guy is a gentleman by the name of Richard Dennis. It says right on the slide. Richard Dennis was labeled Prince of the Pit. I have a couple of notes in here. I never remember these things, but we can kind of go through the kind of notes here. Richard Dennis was coined Prince of the Pit. He's a famous futures trader in the 1980s. He borrowed about $1,600 and reportedly made about $350 million in 6 years. He believed you could teach trading. He had a friend. The friend's name was Bill Eckhart, so it was Richard Dennis and Bill Eckhart. And they kind of decided, they kind of had a little bit of a different view on things. Bill didn't believe you could kind of teach people how to trade, while Richard said, hey, yeah, we can teach people how to trade, and as long as they follow the rules, they'll do well with it. It's not something that requires some sort of inherent genes to get. If you are willing to follow the rules, you can trade, and you can trade successfully. And so they started with a group of 23 traders. If you're kind of curious, it's 21 male traders and 2 female traders. They named the group the Turtle Traders. So if you've heard of that as before, they funded them with their own money. They trained them how to teach, and over the next 5 years, they made about $175 million in aggregated profit. So it's a great experiment, if you would say, and a very successful one. One of the most famous stories of its time. And one of the things that Richard said out of this, there's a couple of really kind of cool quotes, but one of the things that he said is, I always say you could publish rules in a newspaper and no one would follow them. The key to trading is consistency and discipline. So we're not going to talk much more about that. What we're going to more focus on is the rules. What rules are. Obviously, over the years, a lot of people have come up with different indicators and different methods, and there's hundreds of them. Literally, we're going to test hundreds of them in the later section of the webinar today. But there's hundreds of rules. What I want to kind of walk you through today is I want you to understand kind of what goes into these rules. I want you to understand kind of how they work, how they're structured, and then how you can use them to kind of build a business plan or a flight plan, if you would, around trading. So, Kumar, you're very welcome. Thanks for guessing. Conrad also got the answer right, but he was a little bit slower. Stev got it, and then yeah. But thank you for guessing. Again, if you have questions, let me know as we go. Okay. I am going to go to the next slide. All right. If you're not familiar with this guy, Gerald Appel, he wrote the MACD. He wrote it about 40 years ago. He passed away, I believe it was 2005, and it wasn't 2025. It might have been 2023, I don't remember exactly when, but he created the MACD, one of the most popular indicators that are out there. I'm going to talk about it today. While he was alive, he wrote about 17 books on investments and 5 books on photography. And he published a newsletter that lasted 46 years that was called Systems and Forecasts. So there you go. I wonder, this side looks like it has a little bit of a typo on it. It was just funny because I've been using it for a while. What I want to do today is kind of help you understand exactly what goes into a business plan around trading. We're going to talk about the MACD indicator. The reason I like to talk about the MACD indicator is 2 reasons. One, it's very popular. When I kind of put this together as a lesson, it was the most popular video on my YouTube channel, or I should say on our YouTube channel. When I say my YouTube channel, it sounds like a small company. It's actually a fairly big company here. 2, a lot of people use MACD but don't understand it as well as they maybe should, in my opinion. I think when you're trading something, it's important that you understand why you're trading something. I think discipline really feeds into that in terms of a methodology. And so I'm going to thoroughly explain it to you. All right. Some advantages of the MACD. I would say that it's objective. Okay, so everything we're going to talk about today is measurable. It's not subjective. We're not trying to kind of guess what the tariffs are going to do to the economy. We're not trying to guess what the, name whatever kind of is in the news or kind of moving the economy. We're not going to be looking at kind of what the unemployment numbers are doing. They're terrible. But what we're going to be looking at is kind of what the market is doing and kind of what the trend and momentum is. It's going to be objective. Okay, because it's objective, it's easy to interpret. If I do my job properly, you'll be able to understand exactly what the MACD is reading, what it's telling you, when it's giving you buy and sell signals. And it helps you trade in the direction of the overall trend. So I'd say those are the objectives. If I wanted to say disadvantage of the MACD, it's a lagging indicator. It's based on a bunch of moving averages. It's prone to whipsaw, and particularly if you're in a sideways market, it's very prone to whipsaw. So let's go ahead and talk a little bit about it. I would like you guys to actually put a couple of symbols in the chart. I don't come in here with a lot of pre-made symbols. I would just want to kind of, at all, what I'd like to say is I'd like to look at the chart symbols that you have. So if you have a symbol that you want me to pull up, like Apple Kumar, we can do Apple. We'll go ahead and put those in the chart and we'll talk about MACD and we'll look at the particular stocks that you're interested in. So I've got Apple, I've got FFIV. I've got a position in FFIV right now, Conrad. I think, yeah, I'm pretty sure. Okay, let me go ahead and open up MetaStock. And what I want to do is actually, we'll get a couple of those charts loaded up. So I'm going to go ahead and go into charts right here. I'm going to go ahead and load up an Apple chart. And then the symbol for, I think it's FIV.O. We'll just open both of those charts. Oh my goodness, we've got CRWW and then Tesla as well. Okay, so we'll just open up all of these. I probably won't look at all of them, but we will test all of them. So, and thank you for all of the symbols. Kumar, Conrad, Barry, Meyer, thank you. Okay, I'm going to open up this with basically just a clean chart because I want to walk. Let's go up here to clean. Okay, you through kind of exactly what I'm doing. I'm kind of staging in a little bit. Now, it's going to pull some data. I'm going to go back to the PowerPoint real quick, and I want to talk a little bit about the calculation of just the MACD indicator. When Gerald Appel developed the MACD 40 years ago, he didn't use whole numbers. He used fractional numbers. He used a 0.075 exponential and a 0.15, okay? Those don't line up with actual whole numbers, but the closest is a 26-period exponential moving average and a 12 exponential moving average. And that's the only time I'm gonna refer to the fractionals at all. So we're gonna basically do it from a 20, we're gonna kind of walk through the calculation using 26 exponential and 12 exponential, okay? Let me go ahead and kind of get back up here. We've got the charts in. And if I wanted to tell you how to, I don't have this particular position. I thought for a second I did based on the symbol. But let's just go ahead and look at Apple for it was the first one in, Kumar. And I'm going to go ahead and throw on a couple moving averages here. Right here, I've got an indicator quick listed list. several hundred indicators. And one of the things I like about kind of the new versions of MetaStock is it's really easy to find what you want. So I want to pull a couple of moving averages in here. I'm going to do the 26 period exponential moving average. So 26 exponential. I'm going to come over here to the styles tab. I'm going to make it blue. I'm going to make it a little bit thicker. I'm going to go ahead and click OK. I guess I'll do dark type. That's fine. Okay. Let me do that the same thing, but I'm going to do the shorter period moving average, which is going to be a 12 period. So let me grab this moving average. I'll drop it here on the chart. I'm going to make it 12. We'll make it green. We'll make it a little bit thicker. We'll go ahead and click on OK. Okay, we've got two moving averages. A MACD is a comparative of basically a shorter term moving average and a longer term moving average, and that's it. If I wanted to, I'm going to grab the MACD here. The one I like to use in MetaStock is the one that's called MACD histogram. Okay, I'm going to go ahead and plot it on the chart. I'm going to go ahead and leave all of the values, kind of the default values. What I'm going to do right now, though, is I want to talk initially about the MACD line. So I'm going to thicken that one up when I plot this on the chart. Okay. If I want the red line here is what's called the MACD line, okay, or the MACD histogram. If I want to tell you how to calculate the MACD histogram, you would take a shorter term moving average. In this case, oh, this is a 12 simple. Let me make it a 12 exponential, so that's correct. Okay. You take this 12 exponential moving average and you subtract the value of it from the 26 period exponential moving average. And the difference that you'd get is you'd get this red line. That's all it is. When you're looking at MACD, you're looking at the difference in values between a shorter term moving average and a longer term moving average. It's very, very simple. Okay. And I think if you kind of understand why it's being calculated, you can kind of understand kind of some of the nuances of the MACD. So, and let me kind of explain a little bit what I mean. If we're comparing a shorter term moving average to a longer term moving average and the stock price is going up, what's going to happen is your shorter term moving average is going to be above your longer term moving average by definition or by default, right? Because your price is moving up, your shorter term moving average is going to catch up to the price faster than the longer term moving average, okay? So when you have your MACD and it's up in the positive, it just means kind of in a general sense of the nature you're probably in an uptrend, okay? It also can kind of measure momentum because the faster, in this case, Apple's moving up, the more distance is going to be between those MACD values. So if you're kind of in a pretty well-defined uptrend, you're going to have your MACD above, but as you have momentum spurts, as it kind of pushes up higher, it's going to have a bigger peaks, and the faster it's moving, the bigger the peaks and the bigger the valleys. Okay. And I think that's important. If you're kind of in a sideways trend, I'm going to call this area right here, if sideways trend. If you're in a sideways trend, you'll notice that the MACD is going to be a lot more shallower. You're not going to have as big peaks and valleys. And so not only is MACD a measurement of trend, it's also a measurement of momentum. Okay? That's what we're looking at when we're looking at the MACD. We're looking at the difference of two moving averages. It's helping us identify what the trend is doing and what the momentum is doing. Okay. Now we'll talk about some of the other lines as well. Obviously, there's two more lines in here. Gerald Appel came up with like this basically what he called a signal line. It's this dotted blue line. I'm going to kind of just make it a little bit bigger so we can kind of focus on it for a second. Very simply, this blue line that Gerald Appel developed is called the signal line. And the reason it's called a signal line is kind of the rule that he kind of came up with is if the MACD is up above its signal line, you're in a MACD bullish phase. Okay. When it comes down below its signal line, you go into a MACD bearish phase. Okay. Here you had a bullish phase. Here you had a little bit of a bearish phase, bullish phase. It's really all you're looking at. If it's up above its signal line, the MACD is bullish. If it's down below its signal line, like it's been right here for this period of time while the price has dropped, it would be bearish. Okay. He did call it a signal line for a reason, because when it went from bullish to bearish or bearish to bullish, when that crossover happened, that was a signal that you could buy. and it makes sense. If you expect Apple to start going up, if you're bullish about Apple, that would be a good time to buy. Okay, and I'll get into more details on that for a second. in a second, and probably for a minute. So, but we'll kind of go into that. That kind of gets into a little bit of the interpretation. This line here, this is basically, this is called the MACD histogram. It wasn't originally designed by Gerald Appel. It was actually created by Thomas Asprey. I don't know what year he made the MACD histogram. All it is if I wanted to calculate that, is you take the MACD, the difference between these two moving averages, you take that MACD value and subtract it from its signal line, and you would get the MACD histogram. Okay. And so you can use it as a little bit of a shortcut. If it's up above 0, you know the MACD is bullish because the MACD is above a signal line. If it's down below 0, it's bearish because it's below its signal line. And you also get a little bit of a clear idea of how flat price activity is. Like this area here where we had a lot of congestion was a very, very flat MACD histogram. So you can use it. You don't necessarily have to use it. That's what the third line is. And Thomas Asprey added that to the mix. So that's how the MACD is calculated. I'm going to slap back into our PowerPoint real quick. You got your MACD. You've got the signal line, which is the 9-period exponential level of the MACD. And then you've got the histogram. Okay. As I said before, trend and momentum is what MACD is looking to find. And I'm not sure why I have this on the side, but I'll leave it up for a second so you can read it. Trend's very important when you're trading. I consider myself very much a trend trader. I want to be able to identify what the trend is. A lot of people say the trend is your friend, or befriend the trend, or all that kind of stuff. There's a bunch of like cliches that are in the market. I like to find stocks that have been trending, and those are the ones that I like to trade. Okay, so it does do a lot of trend. Let's talk a little, and a lot of momentum as well. Let's talk a little bit about the 3 classic uses of the MACD. Okay, they're going to boil down to these 3 things: trend identification, overbought and oversold, as well as divergence. So we're going to kind of go through those one at a time. I'd kind of alluded to the fact, let's go back to the Apple chart, that when our MACD crossed up above its signal line, we go from bearish to bullish. Okay, we have a tool in MetaStock that I'm actually going to use to kind of highlight this a little bit clearer for you. Okay, we call it an expert advisor. What I'm going to do here is I'm just going to kind of open up our expert advisor, and I'm going to highlight a little bit. There's a ton of different systems that are built in here. You have candlestick systems, you have systems that we put together with Dave Landry, you've got systems that are based on John Ehlers. There's several hundred methodologies in here. What I'm going to do is I'm going to apply the one that was created by Gerald Appel, or we created this to look at the way MACD was used by Gerald Appel. I'm stumbling on my words, bear with me. So I'm going to find the MACD by MetaStock. I'm going to attach it to the chart. I'm going to go ahead and click on close. I'm going to zoom in a little bit so you can kind of just get a little bit more focused on the righter edge of this chart. And I can kind of get a little bit more specific about where we're at. I did say that the MACD was prone to whipsaw. You can see right here when Apple was really flat for a long time, you got a buy signal, a sell signal, a buy signal. What's generating these buy signals though? Okay. As I said a little bit earlier, when the MACD goes from down below its signal line to above it, it goes from a bearish zone to a bullish zone. Okay. When it goes down below its signal line, it goes to a bearish zone. When it goes up above its signal line, it goes to a bullish zone. Okay. If we're bullish on a stock, it might make sense for us to take a buy signal. And so when it goes from bearish to bullish, or when it crosses up above its signal line, that's where we would get our classic MACD buy signal right here. And it's plotted on the chart for us. Okay. Here we got our sell signal. Here we get another buy signal. Here we get our sell signal. Here you get a buy signal. And we can kind of see just by looking at the chart, because it's objective, exactly how well this would have worked on Apple or any other stock. We could do this on FFIV or Tesla or anything like that. I will talk about divergence as well here. So because I think it's also very important. And I better hurry, actually. Okay, so if I would have bought here, the price of the stock was 199, or actually the price of the stock was around, let's just call it 200. And we would have sold up here, let's say we sold it at 214. I know that I made about 14 points there. Okay, 7% on a $200 stock, 14 in 200 would be like 7%, right? If I would have sold and went short at 200 and I would have bought here at 218, that's not as going to be as good. I'm going to lose $4 or 2% approximately, right? And I can do that for every single buy and sell signal and understand exactly how it works. And that's why when I say like a technical analysis of the objective, it's 100% objective. I can go through here and go, well, yeah, if I sold here and went short and I bought back in just today, that would have been a fairly good trade. I can understand exactly how it works. It's objective. Okay, I'm getting a little bit ahead of myself. But for the purpose of what we're talking about right here, the first way we can analyze MACD is, are we up above or down below our signal line? Do we have a cross? Is there a buy and a sell signal? That's the first way we interpret it. What's the trend of MACD? Today, it went from bearish to bullish. This is an open bar because I'm doing it during the day. So this may not actually be a buy signal at the end of the day. It might, if the price gets weaker, that sell signal, that buy signal might go away. Okay. All right. The second way we can look at MACD is overbought and oversold. Okay. The idea here being that if something gets overbought or oversold, there's going to be a good chance that there might be a reversion to the mean. And I would always look at, and I would encourage you to do this as well. I always look at overbought, oversold readings with a little bit of a grain of salt, because I understand that just because something's overbought, oversold doesn't mean it's not going to keep going. Okay. Sure, there's going to be more selling pressure on an instrument that's going up, and there's a likelihood that there's going to be a reversion to the mean, but it doesn't necessarily mean that it's going to happen. Okay. When we start to see overbought, oversold readings on a chart, we're going to start to paint the bars red. You see where there's a couple of bars right here, red? These could be candles too. It doesn't matter. I'm just looking at bars for now. Okay. That means that the stock is currently getting overbought or oversold according to MACD. And there might be a reversion to the mean instance. And I like the way they worded this in the commentary. I'm going to show that to you. Let me go ahead and kind of view. If you're not familiar with expert commentary, I was asking ChatGPT the other day, and it said it's the shining jewel of MetaStock. Now, I personally think that the shining jewel of MetaStock, that's actually Gemini's words, not mine, is actually the scanning. But like, I do like the commentary as well, because it can kind of help you break down what's going on a chart. When I apply the commentary, it's going to look at this day. We have the MACD signal. It's going to tell us the MACD is bullish today, right? Because we just had the crossover the signal line. And that might even hold true till the end of the day, okay? But if I want to come in and show you what it says on this overbought day. So I'm just going to move that arrow over. You see there's an arrow that points directly down now at that chart, okay? If I'm looking at this particular day, we've had a buy signal. It kind of moved up really quick, and it's kind of giving us an overbought, oversold warning. We're currently, now ignore all of this. We're just looking at this day, right? Oops, I clicked off of the commentary. Let me open it up. Currently, the MACD is bullish since it's trading above its signal line. The MACD crossed above its signal line 5 bars ago. That stays because we're looking at daily chart. Since the MACD crossed above its moving average, Apple has increased 4%. Not bad for 5 days. That's also a quick move. So it might be moving into overbought territory, which it's telling us it is. The MACD is in an overbought range. However, prices may continue to move higher for some time. Wait for prices to move lower before considering a short position. So if you see something move fast, it doesn't necessarily mean that it's going to turn around. It means that there might be a reversion to the mean. And in this case, there was a bit of a pullback or a reversion to the mean. For me, that's an early warning sign, right? I might want to tighten up a stop if I have a position in it. I might want to watch for other signals of a reversal, but it's just an early warning signal, okay? And I like the way that they worded it. That's the second way we can use MACD. We can use it to look at overbought, oversold. The third way that I'm going to show you real quick, just because of time, is divergence. And I like divergence a lot. Divergence is something that Dr. Alexander Elder called the most powerful signal in all of technical analysis. Okay. And I think we actually have an example on Apple. So let's look at it. Okay. When Dr. Elder would kind of look at MACD divergence, he likes to use the histogram, this level. Okay. There's some rules that he has in place when he kind of talks about how to use it. We've got some up on our YouTube channel. I'd recommend you kind of look at it. I'd actually think Come Into My Trading Room by Dr. Elder should be required reading. But in that book, he calls it the most powerful. He calls actually indicator divergence in general the most powerful indicator in all technical analysis. But when he talks, he uses MACD divergence quite a bit. Okay, if I'm looking for a MACD divergence, what I'm going to be looking for is very specifically two MACD peaks, okay, with a trough that goes down below zero in the middle. So if I'm looking right here, we've got a MACD peak here, we have it go down below zero, and we have a peak here, okay? And I'm going to go ahead and grab my horror trendline tool in MetaStock. I'm going to go ahead and pick a line from here to here, okay? And I think very objectively, if we're looking at this, this trend line is headed down. In other words, this MACD peak was higher than this MACD peak, okay? I'm going to take a look at the price activity at about the same time. I'm going to look at this peak and this peak, okay? And we're going to go ahead and kind of draw that out, okay? And I would say that everybody that's looking at this line from this peak to this peak is higher than this peak, while this peak is lower than this peak, right? And if you disagree, feel free. But like, I think that's pretty objective. When that happens, this is called a bearish divergence. And the word phrasing that Dr. Alexander Elder actually uses to kind of describe this is literally a breaking the back of the bull. So you have a new price, new high in price that is not supported by MACD, and he calls that a bearish divergence. He calls it the breaking the back of the bulls. And that's a very, very powerful sell signal. So if we were looking at this Apple chart, right in this period of time, this peak would have came in at December 8th. So just like last month, a couple of days we would have had another sell signal and we would have sold off into this buy signal that we're seeing on today, on this very day. So we normally don't get divergences on here, but in this case, it was very, very indicative that we were going to pull back, and we did. Okay, that's the third way we can kind of look at MACD. So, Mia, was that a good explanation? All right. Let's see. I'm going to go exactly. We've already talked through this. I'm going to kind of come over here. We talked about overbought, oversold. Talked about divergence. It was actually in a new trading for a living, and the exact quote was from Dr. Elder: divergences are among the most powerful signals in technical analysis. We just saw a pretty good example of one on Apple. I'd argue that that was almost a textbook example. If I was writing a textbook, I might take that one and put in an example. Okay. All right. Now, we're going to play the rest of the time in MetaStock. And necessarily, we've probably spent 20 minutes or so talking about one indicator, MACD, and the things I love about technical analysis that I think are very unique to technical analysis is we're looking at kind of the charts. We're looking at kind of support. We're looking at resistance. We're looking at the way things go. Everything I showed you today is objective, right? You should, even without MetaStock drawing the buy-ins and sells, you could just put a MACD on a chart and know where the buy and sell signals are because you understand how the indicator works, okay? The other thing that I love about the fact that it's objective is the fact that I can then go in and say, how well did this work? How does it work over? Because I know where my buy points come in, I know where are my sell points, and I can actually go in and say, if I would have traded this on Apple for the last 10 years or 20 years or 2 years or whatever it might be, how well would that have looked? How big were my drawdowns? And more importantly to me, how well does this as a methodology for trading or a business plan for trading compare to other methodologies that I should be trading? Okay. And since it's objective, I can actually find out. I can run a system test. I can say, okay, how does this work? And with MetaStock, it's just not a visual thing. I can get real numbers, real results, real answers. And I can do it on as many stocks that I want. It isn't just showing you where the buy and sell signals is and calling it a system test. I can get real answers to what my drawdowns are, how often I'm trading, et cetera, et cetera, et cetera. So very quickly, I'm going to go ahead and throw in an example here for you. We'll do Apple. We'll also do FFIV. And for the purpose of just, I understand what time it is, I'm going to just do a couple systems. I want you to understand, though, all of the systems that are built in, you can do this with. You can kind of come in here, and the idea here, there's an Ichimoku system. I'm not going to throw that in here. I'm just going to do a couple of them here. I'm going to test about 500 days. I'm going to check my trade options real quick. It's going to be, yeah, that's fine. We're going to start with $10,000. We're going to trade 75% of our trade account. Okay. I'm just going to run this as a test. Okay. It's going to run 162 tests. So I must have selected 81 different methods and 2 stocks. Okay. And it's already done. It's gone back 2 years. It's decided exactly which methods would be profitable over those last 2 years, which ones are not profitable. Okay. I'm going to kind of blow this up a little bit, and I'm going to basically sort it by net profit. Very quickly, if it's in green, it's profitable. If it's in red, it's not profitable. Okay. We have a number of systems here. Remember, this was about a 2-year test period. I could have gone back to 1980. It's very powerful software. It's not a toy that's on the, it's very, very powerful software. But here I can kind of see, okay, our best performing system over those 2 stocks, I did 2 stocks, over 2 years would have been made about a 40% profit. Pretty good, right? But it would have traded about 65 times over 2 years. So 65 divided by 2 years is about 30, let's call it 32. 32 divided by 12 is about 3 trades a year. That 3 trades a month, that's a lot. That's too active for me, okay? We had another pattern trading system, number 3. It was even more active. After that, we had this derivative moving average system that would have made about 38%. Would have had 2 trades and an average trade win-loss of 2 to 0. Let's look at this one. There's a linear regression channel. It made about 35%. The idea here is you want to find something that you're comfortable with. It only traded 9 times a year, 18 times total per stock. So that's less than a trade a month. So let's say that we wanted to learn a little bit more about this one. Let me go ahead. I do want to point this out. I'm not going to kind of dive into this numbers here. On F5 Incorporated, it worked the best. On Apple, it did make a profit. Let's look at it on FFIV. This gives us a lot of numbers. It'll tell us exactly what our profit performance would have looked like. We would have made 60% on FFIV. We'd have 7 trades. 9 of those would have been profitable, 8 unprofitable. Our average winning trade would have been $2,000. Our average losing would have been about 260. It's giving us all kinds of metrics. We can view those as an equity. I'm going fast on purpose right now just because I'm running low on time. My point is it's going to give you a lot of information about the mechanics of the system before you get in here. Okay, I'm going to plot this on the chart. As we had started with, one of the things I think is important about trading is discipline. Okay, I think it's good to know that this was profitable over the last 2 years. It's actually 60% was pretty good over the last 2 years. That doesn't mean we're going to get 60% next time. But I think it's important that you understand why you're trading. We would have gotten a buy signal. Our last buy signal was right here on December 8th. It's gone up quite a bit since then. I want to understand why I'm getting a linear regression crossover system on that. Right? What's going into this indicator? What's kind of giving the systems? Because part of it is to figure out what works, but I think part of the discipline is understanding why it works. So very quickly, I'm going to go to the linear regression system. I'm going to go to matching expert. I'm going to attach it to the chart. I'll go ahead and click on close here. We got our buy signal here. So if I wanted to learn more about this, I'd pop open that expert commentary window. I come down over here to the buy signal. And the commentary would have said, if we ran an exploration for this day, if we do find a method we like, MetaStock's really good at scanning. But right now it's saying we're getting a long trade, so we should exit all short positions if we're short and enter long. This linear regression is a variation on a moving average crossover. The system enters when the endpoint linear region crosses above a moving average of 21 and exits when it crosses below 21. The significant trading without significant drawdown, still profitable in the run-in. This system catches the major trends. So kind of giving us an idea, this is a trend following system. It's using an indicator called linear regression. It's using a 21 period moving average. We could plot those on the chart, kind of see where the buy and sells are coming and understand it more. If we needed to kind of look in the help files for moving averages and linear regressions and understand exactly what the indicators are doing, we could. But we understand that this works at least on FFIV, okay? Mir says, it's also important to notice when the MACD crosses above the 0 line. I like that, Mir, because I think you're right. Because if you're up above 0 line, the MACD is more bullish than if you're down below it. So yeah, that's a good point. Where am I going? Okay, I need to close. Okay, so normally I'd go in and talk a little bit about how scanning works and that you can scan and find these signals, but I'm just gonna kind of close real quick. MetaStock has been rated the best software in its price category for 32 years in a row. There's tons of stuff that I had to talk about here that I just don't have time for. What I'm going to do here, though, is we will set up a trial for you. You can get a free trial. We'll sit you down with somebody in our support desk, and they can help you. If you want to get an absolute free trial, no risk, no commitment, you can go to metastock.com/festival. You can give us a call at 800-882-3040. Or you can go to metastock.com/sales chat. Dave, I'm 2 minutes over.